Hello, ladies and gentlemen. Good morning and happy new week to you all. As I welcome you to another promising session on the morning live. I hope we are all ready for the new week, and this morning we shall be doing what we do as usual as we take a technical dissection of the current market structure to decipher what is really going on and then position ourselves ahead of both the London and the New York session today. And for those who are joining us for the first time, you are welcome on board. I really appreciate your presence and I look forward to further participations and cooperations in the future. So, what we simply do here on a daily basis is to come together as a community to review all the pairs that we are going to be monitoring for the week. In fact, we have four financial instruments that we are going to be looking at. We have the USOil, the GBPUSD, the USDJPY, and the XAUUSD, which is the gold. So we this instruments have been published during the course of the weekend. For those who have not watched the video, the link is in the description box of this current video you are watching right now. You can check it out after the session. So this video illustrates an holistic point of view of what to look out for in the market for this week. So I went to as far as dissecting the daily time frame, where we looked at what is really happening from an holistic point of view to decide how we want to be taking advantage of a trading opportunity on the lower time frame. So I explained this in detail, and it is very necessary that you watch this video so that you can have a background knowledge of what we are going to be talking about here. So simply what we do on the morning live is to dissect the 1 hour time frame, which is our execution time frame. So we only watch the 1 hour time frame during the live session. So try to watch those videos so that you can have a background knowledge of what we are talking about here. So Akshay Amin, good morning to you. I see you. Trust you are doing well this morning and hope you had a wonderful weekend too as well. So with that being said, let's dive right into the business for today. And what we are going to be doing here this morning is to, first of all, you know what we do as usual. We want to keep tabs with the fundamental aspect of the market by checking the economic calendar to see if we do have any high impact macroeconomic event we are looking forward to. Now, let me tell you the importance of these economic calendars. Actually, it's not that we look at the economic calendar to give us a buy or sell signal sort of a thing. What we look at the economic calendar to do is we try to check out what time this event is going to be coming up, and then we look at the charts to see if there are any technical structure that are mature enough for a trading opportunity. So it doesn't tell us if we are going to buy or sell. The structure does, but it allows us to be able to position ourselves in such a way that we can catch any potential move when the time is ripe. So with that being said, let's dive right into the economic calendar and looking at what we have here. We don't have any high impact macroeconomic event for today, at least that will be affecting any of the pairs that we are monitoring for this week. And the only high impact event we are having is not coming until Wednesday, that is April 26th. But for the sake of understanding what will happen today, and let's filter out and bring in the medium impact event to see if there is any of this coming up today, which majority will be looking forward to as well. So let's bring that out and see. So for Monday, we have a medium high impact event, which is the Chicago Federal National Activity Index. So this is a monthly index designed to gauge overall economic activities and related inflationary pressure. So this is another event which on a medium level is another indicator we want to be looking forward to. And we have a previous data of minus 0.19, and we have a consensus projection of minus 0.02, which is a little bit on the positive side there. So we might likely see some traction in the dollar if the actual data remains the same or beyond expectation on this one. So that is what we are going to be looking at for today, and in that regard, let's dive right into the business for today. And before I kickstart, please, I want to confirm that, can you hear me? Is the sound quality not clippy from my monitoring device here? Everything seems fine. Let me know from your own end what it sounds like. If anything, if it's good, let me know. If it's not good, let me know so I can do the appropriate adjustment. So actually, Amin is asking that we do US tech in your live. It's a request. Okay, let's see how I can work that out. All right, I will see what I can do about that if there is time. So with that being said, here, let's dive right into the business. And as usual, the first commodity we are going to be looking at today is the US oil. And in fact, the US oil was one of our the most profitable trade for last week, as we continue to sell this pair all the way from the how far was that? All the way from the $82.50 level down to the $77 area. Let's run through that quickly and see what we are talking about here. So this is what we saw at the beginning of last week's trading session, and we were opportune to be part of this move as we rode it all the way down, giving us this beautiful descending channel that you can see on my screen. And in fact, we also had a breakdown of a key level at the $79.50 level, which happened to be the first time price action would ever break down that structure, at least in the last couple of weeks. And you all know from a technical standpoint that whenever price action breaks down a key level like this, there is a high chance, or there is a likelihood, that price action still will come back to do a retest of that structure in anticipation of a move in the direction of the prior leading price action, which is bearish at this point. Now, if we look at what happened despite the impulsive bearish move we enjoyed throughout the course of last week, one interesting setup is gradually unfolding on the chart right now, and this actually started on Thursday. And if you look at this whole structure, you will see how the zone rather between the $78 level and the $77 area. Sorry, I want to do some readjustment to this pattern here, because I will be using this going forward. So I would hold on a second, please. Okay, I'm trying to. All right, so this is what I'll be using going forward. So we have a structure here between the $78 level and the $77 area, where price action was caught within a consolidation phase, hereby giving us a clue into the indecision at that particular point in time. However, this kind of structure tells us a lot of things, and first of all, and most importantly, it tells us that the market is going through an indecisive phase, as majority in the market are not sure if the bearish momentum will continue to the downside, or we might likely be seeing a bullish momentum anytime soon, where the structure here will at one point in time evolve into a reversal pattern that would send price skyrocketing to the upside. Now, if we take a closer look at this whole structure here, you will notice that as soon as price got into that $77 level, we begin to see some bullish traction resume from that area, giving us a clue that sellers are finding it very difficult to break down that structure. As every point in time sellers try to break down the structure, we have been seeing buy pressure negating all attempt by the sellers to break down that level, and this is a very, very good signal that bullish momentum may gradually be coming in at this particular point in time, and we should be getting ready to be part of that move when it comes true. Now, when we scale down to a much lower time frame, like the 1 hour time frame, to see how price action has actually been reacting to the structure, that is how participants in this market have been reacting to this present current structure, we begin to see things more clearly. But before we go into that detail, I want us to acknowledge the fact that price action is still within the descending channel, and a breakout of that descending channel will negate any selling potential in this market. And one interesting thing about the resistant line of this descending channel is the fact that it shares a beautiful confluence with that $78 mark here, which is going to be serving as our key level for this week. So if price action breaks out of the $78 level, it would have broken out of the resistant line of that descending channel, giving us a clue that the resistant line is no longer strong enough to hold the bullish momentum, to negate the bullish momentum. And if that is going to be the case, a continued buy pressure above the structure will definitely give us that opportunity to buy. Now, if we are going to be anticipating that, we still need to go down to our lower time frame to understand how participants in this market has been reacting to this current structure. And this was what I was able to identify here at the beginning of the week. As you can see here, we have a situation where price action had actually started the week on a bearish note. As you can see, this was where price action started the week at the $77.65 level, drop into the $77.69 area, where we begin to see some buying traction resume around that level. And I shared an update in that regard on both of my platforms, the TradingView platform and the Telegram platform. And for the sake of clarity here, I would like to share with you that commentary I had published on the TradingView platform, and here it is. Hold on a second, I'm trying to load up my okay, so here we go. So this was my first commentary as at this morning, and we had this old simple setup identified, and I said here that price action is currently trading at the $77.69 level, a level that was a demand zone at a point last week. We keep waiting for a signal for trading opportunities. Now, if you look at this old structure here, you will see that on Friday last week we saw how that level also was a bullish a buying niche for participants in this market. And as soon as price got into the structure a couple of hours ago, we begin to see buy pressure. Well, some of us will have taken that opportunity there, but personally, I would rather wait for some confirmation to happen before joining that momentum. So in that regard, we have the resistant line for the week sitting at the $77.65 level, which happens to be the highest point price action has ever been for this week. And one thing I said here is that you all know what we look out for whenever we have this kind of simple setup where price action is trapped within a flat channel like this. We all need to remain patient, waiting out for price action to either break out the resistant line to the upside for a buying signal, or break down the support line for a sell signal in this market. And the way things are looking right now is looking a little bit bullish, but I need price action to break out of that $77.65 level to give me that leverage to be part of a bullish move at this point. So at this point, we could have a buy stop order above the $77.65 level, with a stop loss sitting somewhere right below the $77 area, which will be dovetailing to somewhere around 65 to 70 pips thereabout as our stop loss. And let's see how price action will be playing out from this point. And one thing I would like to also state here, that a further breakout of that key level at the $78 level will definitely be an opportunity to add more position to our existing trade, as a breakout of that level also would have broken out of the resistant line of that descending channel we identified earlier, which would have given us a sign that the resistant line is no longer strong enough to negate any bullish attempt at that point. So this is how we are going to be doing this today. This is how we're going to be doing today. I can see some comment. Okay, thank you, Amin. J Doggy, all right, thank you very much. I really appreciate that feedback. So that is that on the US oil for today. So we are looking forward to a bullish momentum. So anywhere above the $77.65 level, we look out for buying opportunity, breakout retest of that structure. When we scale down to our lower time frame, we continue to see buy pressure. Above that structure, we look out for more opportunity to add more position to our existing trade. And you all know I will be with you in the comment section on my public platform to give you updates as at when due. Now, in as much as we are looking out for buying opportunity on the US oil, you know what we do here on the Sheriff Live Show. We always ensure to keep tabs with the opposite direction too as well. So as we are focusing on buying the US oil today, we also want to take into consideration the potentials of the sellers at this particular point in time. Obviously, it has been a very long bearish momentum since last week, and there's still a chance that sellers could still take over this market at any point. Now, with the current structure we have here on the daily, on the 1 hour time frame, what do we want to see here that will suggest and give us the confidence to sell the US oil? Now, looking at the structure here, we already have a support line sitting at the $77.69 level at this area here. We already have that support line, so definitely we need a breakdown of that structure to give us a signal that sellers are still very strong in this market. And the only way I will be looking out for selling opportunity is to see price action probably take me out of my buy position, drop down below the $77.69 level. Then at this point, I'll begin to prepare to sell the US oil. And in this kind of scenario, you could have a sell stop order, but if you are a conscious trader, you might want to look out for more confirmations to happen. As you all know, from a technical standpoint, whenever we have a breakdown of a structure, we expect that one point in time price is likely going to come back, do a retest of that level in anticipation of a trend continuation to the downside. So this is what I will be looking at if to sell the US oil for today. So I will wait for price action to drop below the $77.69 level. But at this point in time, I doubt if that will happen. But if it does happen, we want to be on standby to catch that move. So that is that on the US oil for today. If you have any questions, feel free to let me know right in the comment section. So with that being said, here we shall be diving right into the next pair for today, which is the GBPUSD. And I hope we all watched the my videos on the GBPUSD, which I shared during the course of the weekend, where we looked at the daily time frame and the 4 hours time frame to identify a potential trading opportunity. And this whole structure we have here on the 1 hour time frame is a fallout of the ideas I shared during the course of the weekend. So you might want to watch these videos. And one thing about watching this video is that it does make you have that freedom to be able to make your own individual decision, as you will have an holistic point of view of what is really going on in the market and use that information to decide on what your own next line of action will be. So that is why it is very important to watch this video, and at the same time it also helps you to be on the same page with us here during the live session when we take on the charts. So with that being said, here let's dive back into the GBPUSD. And right here, remember we're sitting on a very strong demand zone, which was duly identified in the video. And as long as price remains on a very strong demand zone, we'll have no other choice than to look out for buying opportunity. Now let's look at the 4 hours time frame here and look at what we saw. So I will just zoom right in because of time. Zoom right into the current structure here. And if we go to as far back as the beginning of this month, you would have noticed that price action has been trapped within a channel between the 1.2540 level and the 1.23600 area. And one thing about flat channels like this is that it's a sign that participants in this market are still very indecisive of where price action will be going. And if we consider the long-term bullish momentum in this market, which has lasted for about a couple of months, and price action sitting on a very strong demand zone like the 1.23600, which during the course of last week's trading session was a buying platform for majority in this market, as you saw here, that every attempt by the sellers to break down the structure at one point in time has been met with strong resistance from the buyers. So because of this whole situation, we had this demand zone sitting there, and as you can see, after price tested that demand zone, we can see that price had continued to find higher lows. And with this whole situation identified here, what we simply did was to identify the key level which we want to be using as our yardstick for trading activity. And what this simply means when I say that we are using a key level for our yardstick, what I simply means is that if price action breaks out of that key level to the upside, then we start looking out for buying opportunity. Immediately we scale down to our lower time frame, look out for buying pressure above that structure, look out for signs that sellers are finding it difficult to drop back below the key level, then we look out for buying opportunity at that point. But if price action continues to trade below the key level, then definitely we want to be looking out for selling opportunities. So with the key level at the 1.24550 level at this point, and the fact that price action is still sitting above that very strong demand zone, we'll have no choice than to look out for buying opportunity at this point. So what I did here now is to scale down into the lower time frame, that is the 1 hour time frame, so that we can see how participants in this market has been reacting to this current market structure. And when we scale down into the 1 hour time frame this morning, this was what I was able to spot on the 1 hour time frame, and this definitely will be the structure we shall be using at least to guide our trading activity for the first half of this week. And since the beginning of this week, we have seen our price action has started on a bearish note. As you can see here, we had this whole situation started at the 1.24550 level, which happened to be our key level on the higher time frame. So we saw selling pressure, price action drop into the 1.24100 area, where we begin to see buy pressure resume around that area. So we had this engulfing bullish candle spring out of that line. So we have a support line for the week around this point. So this is the lowest point price action has ever been for this week. Then we have the resistant line here, which is the highest point price action has ever been for this week. And you all know what we look out for whenever we have this kind of simple setup. We want to remain patient, waiting for that signal to happen in the form of either a breakout of the channel or a breakdown of the channel for trading opportunity. So with this kind of situation here, we want to be having our buy stop order above the 1.24550 level so that we can catch that bullish momentum if price action breaks out of that structure. Now, in this kind of situation here, we are not going to be having a sell stop order below the structure, and the reason is quite simple. I told you on the 4 hours time frame that we are sitting on a very strong demand zone, and it's not advisable to be thinking of selling at this point. We can only sell only if we start seeing structures that support that bearish move. So even if a breakdown of the 1.2410 level happens this morning, I would rather wait for some confirmations to happen before I want to be joining that decline. So after a breakdown of the 1.24100 level, what we want to be doing is to scale down to our lower time frame. It could be your 5, your 10, or even your 15 minutes time frame to look out for confirmation, which will reflect on the chart as a retest of the structure that was broken. So it could be the retest of the 1.241, or it could be the retest of this trend line, where the appearance of selling pressure coming in there will give us that leverage to be part of a bearish move. So that is only the way we are going to be looking out for selling opportunities in this market. And mind you, remember we have a demand zone at the 1.2, I think the area between the 1.23700 and the 1.23450 level. So what we are going to be doing as soon as price gets into that demand zone is to ensure that we move our stop loss to lock in some profit, as we want to see how price action will be reacting to that demand zone to determine if we are going to be adding more sell position to our existing trade, or probably getting ready to join another bullish momentum if we start seeing buy pressure around that area. But when we get to that juncture, we would know what to do at that point. And if you are following me on my TradingView and Telegram platform, you will be receiving an update on how we are going to be taking advantage of any potential trading opportunity at that point. So that is my view here on the GBPUSD for today. I hope I made myself clear, and I hope I was able to simulate all the possible scenarios that is likely going to be happening at least for the first half of this week. And you might want to screenshot my screen so that you can use it as a reference point when you're about to make your own individual decision. So with that being said, here we shall be moving on to the next pair, And the next pair we are going to be looking at is the XAUUSD. And on the XAUUSD, this is what I was able to spool out this morning after monitoring how participants in this market has been reacting to the current structure. And please watch the video in the description box below on the XAUUSD, where I detailed things from an holistic point of view and how price action has been playing out in this market since the beginning of this year, and that led us into the current structure we are having right now. So please watch those videos. I would not be able to go into that detail here because of time. So right now, just like what we have on the GBPUSD, we can see that price action is currently trading on above a very strong demand zone at the 1,970 level, as you can see here. So throughout the course of last week, we saw our sellers were finding it very difficult to break down that structure, as at every point in time sellers try to break down the structure, we have been seeing bullish buyers come in to negate that potential. And with this all case scenario here, and you all know that whenever we see price action trading above a very strong demand zone like this, we have no choice than to look out for buying opportunity. And when we come into the 1 hour time frame to see how participants in this market has been reacting to the structure since the beginning of this week. You will see how we have a very tight range here. I think about a $12 range, as price action is currently trading between the 1,985 and the 1,977. And this is for me a signal that participants are still indecisive at this particular point in time. They are still testing waters to see what will really happen, and probably even wait for catalyst in the form of fundamental stimulus that will bring some liquidity into the market to drive price movement. And you all know what we look out for whenever we have this kind of simple setup, like a flat channel like this. We want to see price action break out or break down that structure to give us a signal of where price is likely going. And with this kind of situation here, we have no choice than to just be patient and wait out, place our buy stop order above the 1,985 in this case scenario, since this is the highest point price action has ever been for this week, and it is also the resistant line for this channel that we have here. So with a buy stop order above that structure, I'm looking forward to a buying opportunity above that level. Then we could have our sell stop order somewhere close to the support line there at the 1,970. It could be around the $1,978.50 level or the 1,978 area, which will be dovetailing to about 60 to 65 pips thereabout as stop loss in this case scenario. And if price action continues to find higher highs, breaking out key levels, then we will be thinking of adding more position to our existing trade. I will be giving you an update in that regard on my public platform as always. So we are looking out for buying opportunity on the XAUUSD today. I'm not looking out for any selling opportunities here. Even though we have a breakdown of the 1,977, we will need significant confirmation that will suggest that we are going bearish at this point. So let that happen first before we project anything on this chart. So for the breakdown of the 1,977, I'm still very unsure of what will play out around that area. But if it does happen, I will be giving you an update on my public platforms on what to do. So we might be seeing something like selling pressure below that structure to be thinking of getting ready to sell, or lower lows and lower highs on our lower time frame to look out for selling opportunities around that area. But at this point in time, I really can't see anything around that point. All I'm seeing right now is more of a bullish bias at this point. So above the 1,985 seems most appropriate to look out for more buying opportunity. And if a further breakout of that our beautiful key level at the $2,000 mark happens, then we look out for more buying opportunities at that point. But I still think that we still have this whole structure here as a tendency of giving us multiple entries on this one. So let's be on standby on this one, and I will be seeing you on my public platform to give you an update on that one. So we shall be diving right into the last pair on our watch list for today, which is the USDJPY. And on the USDJPY, well, last week was a little bit bullish, and for the USDJPY, I would like us to look at the daily time frame first of all, so that you can also have be on the same page with me here, as most of the structure we have here on the 1 hour time frame and the 4 hours time frame is as a result of what we brought out on the daily time frame. And on the daily time frame, we saw this reversal pattern. If you had been with me last week, you would remember vividly that we had this old reversal pattern spotted on the daily time frame. And okay, let me see, let's show you what is happening there. So this is the daily time frame here, and we had this old accumulation phase which lasted about 10 to 11 months in this market. What a very, very massive zone that area is for buyers in this market. As you can see that at every point in time price action comes within that structure, we have been seeing buy pressure coming from that level, making that area a very, very strong demand zone. And during the course of the month of February this year, we saw the breakout of that bearish trend line for the first time in about 5 months, and giving us a signal that the trend line may no longer have the capacity to negate the bullish pressure along that zone. And from a technical standpoint, whenever we have a breakout of a structure, we expect that one point in time price action will come back, do a retest of that level to incite the second wave of that bullish momentum. And as you can see, what happened here during the month of March, we saw our price action came back to retest the trend line, did a couple of multiple rejection of that zone, and price action transitioned into what looks like a reversal pattern here. And you all know that whenever we identify a potential reversal pattern, let me zoom in so that we can see things clearly. So like you all know, whenever we identify a potential reversal pattern, the next thing we want to be doing is to identify a neckline, which will be the platform upon which we are going to be buying, and at the same time a breakout of that level will confirm the validity of that reversal pattern. And with the old structure we had here, we were lucky enough to identify a neckline at the 133.800, and prior to the beginning of last week trading session, we were anticipating the breakout of that level, which actually happened. Price moved about 130 pips thereabouts, so we bought at the beginning of last week before we saw the sell pressure bringing price back into that neckline. And you all know from a technical standpoint, when price action breaks out of a neckline like this, we still expect that some retest of structure will happen, and we have been witnessing that since the later part of last week until this morning. We have been seeing some buy traction resume just right above the 133.800. So I really wanted you to see how important the 133.800 is on the daily time frame, so that whenever I'm explaining what is happening on the 1 hour time frame, you will have a better perspective of what we are talking about. So with that being said here, and with the information we have gathered, so let's go back into the 1 hour time frame. And on the 1 hour time frame, this was what I was able to spot here after observing how participants in this market has been reacting to that structure above the 133.800. So this is the key level we identified on the daily time frame here, sitting here. So it was our key level last week, and it's still going to be our key level for this week. And whenever we have key levels like this, you know how we do. Whenever price action remains above the key level, we look out for buying opportunity. We look out for structures that will support a bullish momentum. And if price action breaks down that structure, then it would have negated that reversal pattern we spotted on the daily time frame. Then we get ready to look out for selling opportunities to join that decline to the downside. And with this whole situation we have here, look at what happened this week. The week started on a bearish note as we saw price action started with selling pressure just around the 134.480 level, making that level our resistance point for this week. And this is the highest point price action has ever been for this week too as well. Then we saw price action drop into the 133.900, very close to our neckline area, after which we started seeing buy pressure resume from that area. And it also supports our expectations on the USDJPY as we have the 133.800 serving as our neckline and at the same time serving as our key level for the week. And obviously, when price action is trading above our key level, we have no choice than to look out for buying opportunity. And so with this whole flat channel we have here between the 134.480 and the 133.900 area, we just need to remain patient, wait for price action to either break out of the structure or break down of the level for buying or selling opportunity. But at this point in time, it's looking more bullish at this point. So with the buy stop order sitting above the 134.480 level, we shall be looking out for buying opportunities in this market. So let's see what happens in the next couple of hours here. So with our buy stop order above that structure, we have a sell stop loss somewhere below the previous low here, about 40-45 pips thereabout, and let's see how far this move is going to go. And if price action continues to the upside, we look out for more opportunities to add more position. And remember, we still have another key level at the 135.00 level where we shall be looking out for more opportunities to add more position to our existing trade. So we continue to look out for buying opportunity on the USDJPY. And with that being said, let's look out for the potentials of sellers too as well. As you know, there is still a tendency that sellers could still come in, as we saw how the 135.00 level has been a very strong selling niche in this market. And if we zoom to as far back as the month of March, we saw how the 135.00 level was also a very strong selling niche. And at this point in time, the only thing we want to be seeing on this chart that will support a bearish momentum is for price action to break down that support line, which if price action breaks down the neckline, the support line for the week, it would have also broken down the bullish trend line that we have here. And this will be a sign that bearish momentum is coming in. For the selling pressure below the structure will definitely welcome more opportunities to add more position to our existing trade. So that is how we are going to be selling the USDJPY today if price action breaks down that structure. So it's on this note I want to call it a day. Actually, are you still around? Can we still take the US tech? Let me know if you are still around to take the US tech, and then we call it a day. I still need to see your comments to know if you're around so that we can continue. All right. Okay, so let's run through that quickly, and we call it a day here. All right, US tech. So after this one, I would suggest that you follow my live replay. I released that around I think 12:30 UTC, I guess 12:30 UTC on a daily basis. So I normally have the session I do where we normally talk about the US tech, and after this one you can follow up on that on those videos. I share them on a daily basis. So on the US tech, let's look at the 4 hours time frame. So I was able to spot something, though I'm yet to do anything on the US tech for today, but I will quickly run through this quickly. So on the US tech 4 hours time frame, what we can see here is that the fact that price action has been bullish since the beginning of the month of March. And to further emphasize the presence of the buyers in this market, we connected a series of higher lows, which gave us this couple of trend line you can see on your screen. However, things got a little bit interesting during the beginning of the month of April, that is this month. We begin to see how price action got trapped within the 133.220 level, which happened to be the resistant point for this week, for this month. That's the highest point price action has ever been for this month. And then we have the support line of this channel at the 133. sorry, 112.800. I'm sorry, I had a typographical error there. 12,800. So let me do that readjustment there. So we have the 12,800 at that point. So with this kind of situation, from an holistic point of view, it is quite obvious that price action is bullish. But getting into that range at this point, it's emphasized that there is an indecision in this market, hence the need to be very, very careful and then wait for signals to come in for us to be part of any trading opportunities. Now, if we take a closer dissection of what is happening here, we can see that this trend line here, price action is currently trading around that area. In fact, we had a breakdown of that trend line on Friday. Price climbed back up. Then we saw another breakdown happen during the early hours of today, giving us a situation where we have a demand zone around this area, around the 12,000. So you can see what is happening here. We can see that at every point in time, we have been seeing this whole area being rejected by the buyers, negating all attempts by the sellers to break down that structure. So at this point in time, is looking a little bit bullish if we consider the long-term bullish momentum in this market. So now what we are going to be doing now, so that we can understand what is really going on around this area, so we want to be scaling down into the 1 hour time frame. Let's see how participants in this market has been reacting to this current structure. So when we scale down to the 1 hour time frame, this is what we will be able to see here. So personally, I've not done that this morning on the US Tech. I was supposed to do this after our live session, but since Amin has told us to do something, so we have no choice than to look at it here. So at this point in time, we have a support line here already at the 12,930. So let's label that for the sake of clarity, so that we can have a visual understanding of what we are talking about here. So we have the 12,930, which happens to be the support line for this week right now. And then we have the resistant line for the week sitting somewhere at around the $13,000 mark, a very strong psychological level, which was serving as our key level for last week. So we shall also label that out, and then let's see. Okay, so we have the $13,000 level here. So we have a beautiful setup here where price action is currently trading within this whole range here. Now, for me personally, considering the nature of the trend on the higher time frame, which is bullish, I'm tending towards a bullish momentum on this one. And the only way I'm going to be buying this is to wait for a breakout of the $13,000 mark for me to join. And if price action breaks out of the $13,000 mark, price action would be back above that bullish trend line, which further emphasizes the strength of the buyers in this market. So with a buy stop order above the $13,000 mark area, we look out for buying opportunity. And the further breakout of that structure will definitely welcome more opportunities at the point in time. So we'll continue to guide our bullish momentum all the way to the upside. However, if price action breaks down to 12,930, I would advise us to remain very, very patient, as we don't want to get too excited at the breakdown of that structure, as we still need some confirmation to happen before we want to be joining any potential move. And for us to join that potential move, what we are going to be looking forward to is this. I will be giving you a visual representation of what to look out for. So we should wait for a breakdown of the structure to happen. After a breakdown happens, we scale down to our lower time frame to look out for more confirmation, which will reflect on the chart as a retest of either the 12,930 or even go to as far as the trend line that was broken on Friday. Then we look out for selling pressure to join that bearish move to the downside. So it could be from this, it could be below the $13,000 mark, or even below the 12,930 to join that move to the downside. Now there is a caveat to this whole setup. Remember, we have the $12,800 level serving as the support line for that flat channel we identified on the higher time frame. So what we are going to be doing here is to move our stop loss accordingly, lock in some profit if price action drop to that level. Then we wait out and see how price action will be reacting to the structure and that will determine if we are going to be adding more sell position or get ready for another wave of bullish momentum. So let's see how price action plays out in the next couple of hours at this point, and I will be dropping an update by 12:30 UTC on my YouTube channel. You can check it out then and see what we are going to be looking at afterwards. So simply at this point in time, our center of focus is just right within the $13,000 mark and the 12,930 level. So this is where our center of focus will be, and we remain patient for either a breakout or breakdown of that channel. And remember, I said a breakdown of that channel, we are not having a sell stop order right away, as we still need some confirmation to happen before we want to be joining that move. So I hope I made myself clear there, Amin, and if I did, let me know right in the comment section. Christian Ume, good morning to you. I'm grateful for that compliment, and I hope you're having fun out there and getting ready for the London and the New York session. I look forward to seeing more of you, Christian. All right, it's on this note I want to wish everyone today best of luck during the London and the New York session, and I look forward to seeing you in the comment section on both my TradingView platform and my Telegram platform as we continue to monitor price action. Do have a wonderful day, everyone. Bye-bye.